All right, welcome everybody to this episode of your Freedom Hub's Free Market Cash Patient and also Cash Doctor. That means I'm your host, Jeff Cantor, along with my co-host, Charles Froman. We are sponsored by your Freedom Hub and some other great sponsors, as you'll see. And you're going to want to visit us at our new setup. Before we roll over there, though, here's the key link to subscribe if you're not already getting notices about these meetings. And then these are some of the channels, but I'll show you a better way to find those. We're really here to solve the one and only key problem, and this really encapsulates the whole thing. We could talk for hours about it, but this pretty much tells the tale. We got to connect the consumers to the doctors, problem solved. Everything else, we'll figure that out as we go, but once we get to that point, we're great. We're making this happen through the WOW app. We've got a great place for you to watch, learn a little bit about it, catch a video, get a chance to participate in a couple of different ways. We are also having you come through our new site, which is the MP for Marketplace, mphealthwealthfreedom.com site. This is the home page here. You'll notice if you hover over the various headings, there's some drop downs and they keep adding all the time. But the most important one we're focusing on at the moment is this information one. And if you were to click on it, it takes you here. So this is the kind of the hub of all of what's going on these media pieces. So explains what's going on. This gives you a little rundown on the guests of that current week. So here we are for the 23rd tonight at 7. So we're going to have our financial group guests tonight here. Then we're also going to have a chance for you to register if you were to just see this for the first time. A little breakout on who's coming up, and then also links to our various channels. And I'm going to skip over here because it opened up on the other side. As an example, this is like the Brighteon channel. You'll notice there's a wealth of videos. They really are super great. It doesn't matter if they're a week old, or 2 months old, or 2 years old. There's some fantastic stuff in here. And we've actually just launched on the new competitor to YouTube called Rumble. So we're all ready to rumble. So here we are. We're up on that one too. So as any of these great new places come, so we're on BitChute, Brighteon, YouTube, and now Rumble. And then afterward, we continue the conversation, because the reality is after we have a great talk tonight, you're probably going to have some questions, want to learn more. Maybe this person's working on some kind of a cause and they need help getting legislation passed. So everybody's going to have a continuing the conversation page. Here's an example of what we've got together for Darren. This is not completed as yet, but it's a good model. The various links where his videos are at, part of his PowerPoint, and other stuff is going to be on their blogs and so on. So you'll see all about that. And then we're also showcasing all of these innovative activities and things you need to take action on. These are all important issues that are taking place right now. And then also these are the various organizations that are helping support and fight for our freedoms on whatever topic it may be, whether it's health, wealth, or freedom in and of itself. So on that note, let's shift over and I'll show you how we'll utilize this site here as a good example, because Charles is going to help bring our guests into the equation tonight.
I am Jeff, and welcome Leah and David.
Thank you.
I met Leah a year and a half ago, maybe through LinkedIn, I'm going to guess. And, you know, she really got what Jeff and I were doing pretty quickly. You know, Forbes featured us for creating cash patients, which is the secret sauce to help fix healthcare. And for Leah and David, healthcare is just part of their package. You know, they meet with families and business owners to look at their full financial needs, not just healthcare. And so beyond helping us with major medical, she's a great agent. She can help us discuss something we really haven't discussed in this weekly health webinar. And that is the huge, gaping, scary hole called long-term care. I don't know if you guys follow this, but in so many articles, the scary phrase is, as folks live longer in retirement, past age 80, past age 90, towards 100 pretty soon, the long-term care expense of nursing homes, skilled nursing care, nurse aides at your home is going to exceed $100,000. And guess what? The insurance policies for long-term care are expensive, or they didn't underwrite well. The market has collapsed. People are desperately trying to divest themselves of assets to qualify for Medicaid to pay for long-term care. And then they go to Medicare and go, Medicare, how come you don't pay for this? Well, they don't. So what are you going to do? You got $100,000 bill and you got to take care of grandma. So they have a, well, it's not too unknown way to pay for that with a long-term care rider on life insurance, but there are new ways to do it now. Ones that don't just take your money and don't give you anything back. So Leah and David are veterans in the financial industry. They've really covered all the aspects of the market, longtime agents and brokers, financial planners. They're out there in California, really popular with their target market and friends. So that's my intro, Jeff.
Well, it's quite the intro, and interestingly, you guys have a lot to answer for here because it is the 800-pound gorilla. We typically never talk about on this show because it's a topic no one likes to talk about because it's just so seemingly insurmountable. So I'm keen to see what you have to share.
Awesome.
The screen, and also the screen is now yours.
Perfect. Thank you, Charles, for that amazing introduction. Again, my name is Leah Garcia, and I am the money doctor. And this is David Simpkins. He's the smarter money doctor, just so you know.
You're so sweet.
We actually represent World Financial Group. We have a huge platform, and we cover every different product and services from the crib to the casket and everything in between. Today, we're going to focus on long-term care, and we're going to highlight one of our platinum providers, which is nationwide. They're on our side, and by the end of this presentation, you're going to see that they're on your side too. So when we talk about long-term care, just like Jeff alluded to in the beginning, it's kind of that gorilla in the room.
Not moving.
Let's see, one second here. Oop. So what is long-term care? This presentation is take action and understand your options. A lot of times families think of long-term care as a nursing home insurance, but I really like to think of it as a stay out of the nursing home insurance. Listen, long-term care provides a variety of support and services designed to help people as they live independently and safely as possible when they can no longer do so on their own.
And you know, it's really important to think about it. We talk about this all the time, but it's very important because this is not a time that is in the future where people can wonder if it's going to happen or not. It's going to happen.
Yeah.
It's just a matter of when.
Definitely.
So people need to really start thinking about it and really need to start planning for it.
So you can look at this slide and you can see 32% of long-term care is in a nursing home, which is just a small fraction of really that whole entire need. 54% is home health care provided by a professional, and 14% is in an assisted living. That means nearly 70% of all long-term care events are going to be handled outside of a nursing home.
That's incredible. And what I also want you to think about is baby boomers right now, 78 million of them have fueled every major period of time that they've passed through because of their needs. Well, I tell you what, I don't see baby boomers going out any differently than how they lived. Long-term care is going to be very, very prevalent moving forward. And when you think about it, people 65 and older, 70% of those people are going to need long-term care. So that means 7 out of 10 people 65-year-old are going to need long-term care coverage of some sort. So it makes sense to start planning for it.
Absolutely. And I'm not a gambling person by nature, but if I was going to the casino and they gave me a 70% chance of winning, I'd be taking those odds,
I'd be
right?
betting, yes.
How about women in long-term care? Let's see, we have a lot of women on this call. This is a huge need for us as women. Women live an average of 5 times longer than men, and 60% of all caregivers are women. Listen, providing for long-term care can be financially, physically, and emotionally taxing for spouses and children. Women, I want you to just think about this. Consider this. Could you physically carry your spouse from one side of the room to the other side of the dining room? It's not physically possible today while you're in good health. Imagine if you were not in good health or your spouse was really having that type of an event. Is that really what you want to be doing with the last years of your life with your spouse?
No, I don't think so.
No. And what about the cost of long-term care? They're rising every single day. Nearly $40,000, over $50,000 for home health care. That is each year. The average long-term care event is 3.5 years. So that's $50,000 every single year. And by the way, in the next 20 years, those costs are expected to rise significantly. If you look at the average cost of a nursing home is nearly $100,000 for 1 year. And what if you and your spouse both need care? That's times 2. By the year 2037, that's almost $180,000.
That's almost $180,000.
That's crazy.
Right. And that's just for long-term care. That's not talking about everything else.
Right. What do we eat?
It's crazy.
Paying for long-term care, there's, a lot of people have this misconception of what types of benefits pay for long-term care. And just like Charles alluded to, a lot of times families think long-term care is paid for by their health insurance. And that is actually a complete error. Does not. Medicare will cover 100 days, but that's only if you're combined 3 consecutive days. Medicaid, or if you're in California, Medi-Cal will pay, but you have to spend down your assets. Basically, you have to be destitute to have that option.
Oh, and by the way, Charles was talking about that earlier. They have a 5-year look-back period now, too, because a lot of, obviously the government finds ways to keep people from scamming them. So people were looking at ways to get rid of their assets and sign them over to relatives and things like that. Well, you can't do that anymore.
And here's the thing, Medicare is going to be what we call 3 hots and a cot. It's not talking about putting you in a beautiful home with the best quality of care. It's basically feeding you and giving you a place to sleep. And that's
not it. And then when you talk about self-insuring, most people simply just cannot afford that.
Right.
Most people just simply plain old cannot afford self-insurance.
Well, how do you know how much money to put aside?
You don't. You really don't.
So there are basically 3 options. The first one is a standalone, just like Charles alluded to earlier. These are kind of become extinct. They're very costly. It's a use it or lose it kind of benefit. More cutting edge is a life insurance with a long-term care rider, which offers more flexibility. So if you need life insurance, there are some companies that will allow you to have that extra rider. But just remember, that bucket for life insurance in your long-term care is coming from one single bucket. So if you spend down that money using it for long-term care, you're not going to have a tremendous amount of money for life insurance.
Basically, what you're looking at, based on your death benefit, most companies is anywhere between 2 and 4% of the death benefit that you'll be able to access for long-term care purposes. But as Leah alluded to, that's going to also drop your death benefit. So if you bought it for the primary purposes of a death benefit, then you don't really want a long-term care event to erode your death benefit.
Right.
Okay.
It's a great benefit. We do this all the time. But there's a new benefit or more recent discovery. Yeah. It's called a linked benefit. It is a life insurance policy chassis. However, it's intended for long-term care, which could be a good fit if you're specifically looking for something that has a long-term care benefit, but it's super affordable and very, very flexible.
It's very flexible. Yeah. I mean, we talk about Nationwide being on our side. You're going to really see how much they're on your side here, guys.
Right. So have you started to plan for long-term care? Here's some things to consider. While you're receiving care, your spouse is still going to need financial support. They're going to need financial security. And when it comes to care, you want to be able to have options. Do you need home health care, assisted living, or maybe you want some family care built in?
Well, when you think about family care, listen, I don't know about you, but when I get to that time and place, I don't know if I want my son taking my bedpan away. Okay, I want to have options.
Right.
I want to have options. If I want to use my family, great, but I don't want to have to use my family. I don't want it to be a necessity. I want to have a plan that, when I think about having a plan, I want to have a plan that gives me options.
Right. And I don't want my family to have that as the last vision of me. You know what I mean? That's just not the way it is. So having family is an option, but you want to preserve those assets and income for your loved ones. You want to keep that care plan open. You want to maintain your loved ones' personal and professional lives.
That's a big deal. You know, you think about it, your family members are not natural caregivers. They're not nurses or doctors. They're your family. Okay. So you want to make sure that you're able to maintain their personal lives and their professional lives. In a lot of instances, when a long-term care event happens and is not planned for, the whole family goes into disarray. Right. You want to make sure you're able to preserve the physical and emotional health of your family caregivers, right? You don't want to burn them out taking care of you. And if you plan for it, you don't have to, okay? Because basically planning increases the likelihood that your care choices will be implemented in the manner that you want them to be implemented and not in the manner that someone dictates to you.
And also preserving those relationships. If you find that yourself becoming that primary caregiver, you're talking about a lot of taxation on that relationship.
Yeah.
So long-term care, what to look for? You want to look for coverage that will cover all qualified expenses. It will also cover for temporary claims as well.
You want to make sure that the cost structure is easy to understand. Folks, if you look at a plan and you have to pull out an abacus, get your toes out, your kids' toes, and start counting, it's too complicated.
No.
You want to look for a plan that's easy to understand. You want to look for a plan also that incorporates inflation, looks at future costs and incorporates that. You want to make sure that you look at a plan and determine whether that plan requires you to turn over receipts to them in order to get your benefits or not, because that's a very big deal.
That's a big, big deal. Because if you have to have a reimbursement program, is what they refer to that. That means you pay in advance, and then the company, the insurance company, goes through every single benefit, and they decide what to pay for, what not to pay for. They send you a check. That could take 30 to 60 days or even longer.
Exactly.
And it's taxing. I mean, you're really having to look through every single receipt. Reimbursement, we refer to this as indemnity style. Really, really simple to understand. They send you a check, you pay the bill. Pretty easy. Can you do that? I can do that. I'm terrible at math.
That's pretty simple. That's pretty simple.
Easy.
And nationwide plans do that. So those are the things you want to think about. So now let's look at some solutions here. So one of them, we talked about the long-term care rider. Okay, the rider basically is added to a life insurance policy at an additional cost.
Right.
Listen, this is a good fit for those people that are primarily looking for life insurance, but have a concern about long-term care needs. They know they don't have anything set aside for it, so they have a little concern about it, so they get a rider on the side. But they're primarily looking for life insurance. Right. So the long-term care is a rider, okay? Now remember, a rider accelerates your death benefit. It helps pay for long-term care need, if you said, like I told you, between 2 and 4% of the death benefit. And the monthly benefits are paid directly to the policy owner. So it's called an indemnity plan. You don't have to worry about receipts or anything of that nature.
So it includes a wide range of covered services, and you don't have to have your loved ones caring for you. And you also still receive a death benefit at the end. This is huge.
Right.
When we look at the example, you're going to be blown away.
So the other program, the linked benefit program that we were talking about, and this is the one I'm very excited about personally. We both are very personally excited about this one. This is called Nationwide Care Matters. This is strictly a long-term care program, but folks, it's an incredible long-term care program. Yeah. So basically, the long-term care coverage provides death benefit by linking to a universal life policy. This program is a good fit for those looking to maximize the long-term care option of that insurance chassis vehicle. This is for premiums. This is basically for long-term care. And to be even a little more explicit with you, this particular Care Matters product is really designed for people that have comatose money.
There you go. Sleeping assets.
Sleeping assets. Basically, they have money that's sitting in a money market account somewhere that's not doing anything for them. And basically what this program shows you how to do is to reposition those assets that are not working for you and get them working for you. And I'm going to show you the real power in this, because if you see right there at the bottom, it says, along with a way to recover premiums if care is not needed. Imagine purchasing a long-term care program and not needing it, but having the coverage the whole time. And then if you don't need it, you get to get your cash back.
Win, win.
It's an incredible situation.
So what does long-term care from Care Matters do nationwide? The premiums are guaranteed, which is huge. You don't have to worry about your rates going up, and it's a monthly benefits are paid directly to you. Again, indemnity style. There's no restrictions on how you can use your benefit. It can be family care, home care, health care. It's totally up to you.
The biggest thing I love about it is your premium, your return of premium is guaranteed.
Wow.
Guaranteed. Leah already alluded to the fact that the monthly benefits are paid directly to you, and there's no restrictions on how the benefit to use. Folks, let me give you an example of what I mean by that. Most times when couples have a long-term care event, usually one of them might not be insurable.
Right.
So if you have a spouse that's not insurable and you have a long-term care event with this particular product, you can get the cash and help your spouse with it, because you don't have to show proof of how you use the money. It's an incredible program. To get started with this program, we have what we call a nationwide long-term care cost assessment. Basically, it takes a personalized look at your particular situation to determine what your long-term care needs would be. This is what that form looks like. And if you're interested, we'll have our contact information at the end. You just contact us and we'll provide you with this form. You fill it out. And by the way, this is a no-cost service. Huge. We don't charge you to analyze whether you need this and can walk into this product or not. We do this for you. This is a service, and I'm very excited about being able to offer this service to you. So let me give you really a quick glance at how this plan actually works mechanically, so you have a good understanding. This example right here uses a single premium of $100,000. Right off the bat, that single premium purchases a 2-year death benefit, accelerated death benefit of $180,000.
Those benefits could also be used for long-term care. So that means immediately when you deposit $100,000, you have $180,000 that could be used for long-term care. This program does have a 5-year vesting period, and at the end of that 5 years, you're going to increase your bucket to over $500,000 for long-term care, and that was just by depositing a one-time lump sum of $100,000. That's crazy good.
And remember, if you don't exercise any of these benefits, you get your money back.
Your money back.
Incredible.
And what happens if you do spend down all that $541,257 for long-term care? At the end of the day, you still have a residual of $36,000 in death benefit.
That's incredible.
For $100,000.
That's right. That's right. And remember, I called that $100,000 comatose money, right? You know, that's my term, obviously, but what I'm talking about is there's a lot of money that I know personally, being in the financial industry, there's a lot of money sitting around doing nothing. Right. And when I say doing nothing, I mean doing nothing for the people that deposited it. The people that are using it, believe me, they're leveraging it to the hilt, but the people that deposit it, they're not getting anything for it.
And also, if you're thinking about self-insuring, you might have heard that term. What if you could have a way where you could self-insure for pennies on the dollar?
And get your money back if you don't need it, if you don't use it. Right. That's incredible service, incredible. So this is breaks it down for you, basically how it works.
$100,000 premium, that benefits. So that $180,000, remember, it would be used through a loan because this is life insurance. So they're going to use it as a loan, and that gives you more beneficial tax treatment. Right. Or you can surrender it and have a return of premium. You get your money back. It's a win-win.
Why nationwide? Well,
you can see they're on your side.
They're on your side. But the other thing is, by the way, and I'm really excited about this, on our platform, all the companies are A-rated. Right. We don't work with any companies that are not A-rated. If they fall out of the A-rated standing, we kick them off the platform. Right. So that makes me feel really, really proud that when I sit down with anybody, then I know that the companies I'm representing are all platinum companies. So basically what I do then as a broker, I look to my clients' needs and I find the companies that are going to best suit what my clients are looking for.
And really quick, also Nationwide has a dedicated WFG support. And what that means for you as a client is that they're dedicated to us as agents to give you the best solutions, best products, yes, best resources. They have tax professionals and they will answer and design programs.
They bend over backwards for us. They're an incredible company, incredible company. And they give, they're givers, okay? They don't just take, they give. These are just examples of some of the things that they do within the community and around the country. It's an incredible company. It's an incredible company. There's not many companies that I brag on and boast on, but this is definitely one of those companies. Definitely one of them. So your next steps, folks, we're your financial professionals here, thanks to Charles and Jeff. Yes. So you need to get a personalized long-term care cost assessment. See what your situation is. It's free, folks, complimentary to you. Evaluate the sources of income during retirement, and then consider the coverage options that are going to best suit your needs. So I hope that was helpful for everyone. This is our contact information. If you seriously want to take a look at this, if you're just curious and you want to peel the onion back, get in touch with us. We'll get you the cost analysis and we'll take it from there. Awesome. Jeff, Charles, thank you so much for this opportunity. We'll turn it over back to you.
Sounds good. Appreciate that. We're going to roll it open for some questions just before we do, just so everyone can see over here. You go down here, here's their little fact finder over here you guys were talking about. So you can just click on that and we'll take that on over to the continue the conversation situation there. So there you go. So anybody with questions, obviously get some hands raised or pop something up in the chat box there and we'll respond to that. So hold off here. Let's see. I got some hands up. So let's get started. Oh, look, I got Charles here. Let's get him going.
Sure. Fantastic, Leah and David. That's exciting. And I'm sure Jeff and I are going to want to see how we can get that free assessment out to our health customers because, who isn't worried about $100,000 bill?
Right.
So what is the separation between folks who may know about the LTC rider on life insurance versus getting the new linked product? Where would you encourage a client to go the route that has been innovative over the past few years, the rider, versus this new option? How would you distinguish between those two options?
That's a great benefit, and we get that question all the time. The way I think about it is two ways. Number one, they should have both if they could, really and truly, because a rider is going to have a cap based on how much money you can receive. Basically, it'll be between 2 and 4% of your death benefit. And remember, it's one bucket. So if you die, that money is only going to come from there. But if you use that benefit for a long-term care rider, it may deplete your death benefit. So really kind of a fine line, but it is a tremendous way to use it. We do that all the time. Long-term care with Care Matters, I think of this, like David alluded to, dormant benefits. So if you have money sitting in a CD, maybe you have an old life insurance policy that's not really doing anything for you. It's not really a cash value policy that's not really growing. And the benefit for the Care Matters is it will pay out generally a much higher benefit that can be used for long-term care. You saw the example, $100,000 becomes over $500,000. So that, I hope that answers that question.
Well, I'll just add really quickly that the real difference for me is that the Care Matters program is really earmarked, it's really pointed or designed for people that have that cash to reposition. It's really ideally designed for people, high net worth people, and people that have that cash maybe sitting in a money market account, earning less than 1%, or sitting somewhere where it's not really working hard for them, where they can reposition it to take advantage and leverage this type of benefit.
Also, really quick, long-term care and a life insurance, you have a higher threshold to qualify medically because it is life insurance. Right. You have to qualify for that. Care Matters has a much more forgiving, a much lower threshold. So if you're having some health challenges, you may be much easier to qualify for that benefit medically. One
other thing, the Care Matters program, the sweet spot for it is people in their 50s and up. Okay, that's really the sweet spot. People in their 50s and up. Right. I hope that answered your question.
Yeah. That was good. Kishore, I see you got your hand up.
Yeah, so long-term care has interested me a lot. The initial plans that were offered quickly went haywire because you couldn't estimate the liability, potential liability. How can you really predict how long a person is going to live? So the premiums kept rising, right? And in the end, it just went bust, right? So it seems like you're managing your risk by keeping it 5 years at a time. So if in 5 years you don't use that benefit, or if you use the benefit, does it get automatically renewed or on the same terms? Otherwise, it's not quite long-term. It's more like medium-term care option, right?
Thank you so much for that question. I think I might have maybe misguided you. So it has a 5-year vesting period, meaning that it takes 5 years for the benefits to become the maximum amount. So that $500,000 benefit was after that 5 years. Okay. Now at that point, it's fully vested. You could decide you don't want the benefit and cancel the policy, no harm, no foul, get your money back, but you can keep it for as long as you need it. You never deposit one extra penny, your premiums are done, you have the benefit, it's safe and secure for you. You could also add in an inflation rider so that it automatically does adjust for inflation. So it's tremendous because your benefits are guaranteed and they're locked in. But
that raises the question, like, suppose that you buy it, let's say at 60, as you were saying, the sweet spot is of people 50 plus, which is great. But again, how are you managing risk? I mean, then a person could live for the next, let's say, 30 years. So it's the same risk then, with long-term care then, right? and your potential liability will be huge, and how you can handle that if you're saying the premiums are remaining constant.
Well, it's intended to be a lump sum.
It's a
So
single
you
premium.
deposit the $100,000 and you don't have any additional contributions.
Right.
The difference is that $500,000 will pay out over a 6-year period, and very likely it's going to overpay you. And that extra premiums, that extra dollars compensated to you, you put it in the bank, you do whatever you want with it. You're buying a bucket that you use at any point in time. You can turn the faucet on and off at any time. You're getting 5 times the benefit for one single.
Right, and the benefit is your benefit. It's a lifetime benefit as long as you keep it there. You have it forever. So you're talking about managing the risk. Once you purchase the program, the risk is mitigated right there, as long as you keep it in place.
Right. Well, what I'm trying to understand is if you get the benefit after 5 years, if you have an event which requires its use, otherwise you lose it, right?
No,
you don't.
You don't lose it. No.
Then that's not insurance, then, right? That's investment, then.
It is.
Well, it's life insurance with long-term care. It's long-term care with a life insurance chassis. Remember, it's with a universal life policy.
Right. So from day one, you deposit $100,000.
So the example I showed you is $100,000 from day one.
You have $180,000 of long-term care. If you have a
That's
need the very next day for long-term care, you have $180,000 for long-term care. If you passed away the very next day, your family would be paid $180,000. However, as the program vests, after 5 years, your 180 becomes over 541,000 in benefits for long-term care.
And if you need
So are you saying the premiums will remain the same for all time, or
no
additional premiums?
$100,000 one lump
And
sum.
like the example we showed, it's a one-time lump sum payment. So if you put $100,000 saved, then that's the premium. That's it.
No additional contributions.
And if you had a long-term event, in that example we showed, that long-term event would be paid, you'd be paid $7,500 a month for 6 years.
Okay, so then you're managing a risk by capping the benefit. So like if you have $1 million liability, you still get 500,000.
Right. So if you wanted a $1 million in benefit, obviously we wouldn't be contributing $100,000. It may be.
It'd be more.
We would need to adjust.
It'd be, right. It'd be different.
Okay. All right.
See, that's why the cost analysis, that's the purpose of that, to determine what your particular situation would call for, because everybody's different.
Okay, so I did inquire about the life insurance linked death benefit. Turned out it's not available in California. So are there similar restrictions on buying it for this plan that you just talked about?
No, well, we're in California. So we showed you a plan that we operate with in California. Nationwide.
I see. Interesting.
And just to clarify, just so everybody does sort of understand, so if I get up to that 580 some thousand and it's X amount of years and suddenly I need it and I go ahead and I spend it all down. So now, did it go up if I had bought that inflation rider? Was it actually more than 581 net at the end of that time window? Therefore, right. But once I spend that all the way down to zero, I'm done. There's no money's coming back into the account or anything. And if I don't use it all up, then does it convert the balance left over to the death benefit, or what is the death benefit?
Correct.
Whatever the total dollar amount left over.
You have about a 20% residual for death benefit.
Okay, built in automatically. That's where you showed that little residual in that example. Okay, that's good. So there's no way you can deliberately spend all of it and have no death benefit. It's going to always at least leave something behind regardless. So, but yeah, like Kishore said, if I wanted $1 million, I'd buy like a $200,000 lump sum premium, in other words, and therefore the benefit of that analysis like you described.
That's exactly.
Okay, Charles, I see you got another question there. What else can you get clarified?
Sure. I mean, Leah and David, I imagine the wealthier clients are going to want those skilled nursing care facilities that are really higher end.
Right.
So that's where they might want a bigger benefit than $500,000 in some cases. And then for though, I mean, as the baby boomers retire, I imagine more entrepreneurs are going to enter the supply of this good long-term care and are going to provide more upper middle class options. So maybe not quite as expensive as the gated skilled nursing community, to make sure that that $500,000 will work for a lot more situations, right? So you budget that amount. Now let's see if the market's going to give us more choices, and if not, we just got to search more.
Well, we have. Are you? If you're talking about payment structures, is that what you're really asking about?
No, I guess I'm really just making a comment about economics, in that if $500,000 is the available benefit, there's probably going to be entrepreneurs entering the market to create new types of skilled nursing facilities that will cost that much and not more. You know,
it creates a lot of opportunity, Charles, because there are places currently where you're basically signing all your assets over to them, and then they promise never to budge you out. But I'm sure you're right. They'll be the ones that say, look, I got a $500,000 budget, and I don't know if I'm going to live a year or 4 years or whatever, but here's $500,000. Will you keep me? So yeah, there'll be plenty of people that go for that type of thing. And because that was the one thing, you know, as you're describing this and as it gets more popular, you start thinking, well, geez, there's only so many nursing homes. There's only so many. So if you sell so many of these, where are they all going to go? You know, that's an awful lot of demand. And plus, like you said, the baby boomers, there's nowhere near enough facilities right now if we all had to be in one tomorrow.
We're talking 78 million people, Charles. That's, Jeff, that's a big number.
The one good thing COVID's opened up is like now we can set up like cots at the McDonald's because you can't eat in there anymore. So now we can just start housing people at these fast food joints and stuff. Repurpose those places.
well, Jeff, you know, Charlie here. I do think you look at. I think Jimmy Buffett started a retirement home in Cabo.
He did.
And I've got to imagine there's going to be a lot more retiree type home arrangements started over the next 10 years.
Well, you know what? You know, like we do in our presentation, baby boomers have fueled every major thing since Gerber baby food. Okay, Gerber exploded because of the baby boomers, and they're still on the market today because of them. And then the fast food industry, the auto industry, the real estate industry, everything exploded because of the baby boomers. And now the baby boomers are entering the retirement phase. And long-term care is going to become a prominent piece in everything that they do because they're going to have to consider it. It's not a matter of if, it's a matter of when. Okay, just like retirement is not a distance someplace in the future. It's a bucket of money that you have to have. Well, long-term care is the same type of situation. And baby boomers are going to have to prepare for it. So the market's going to have to accommodate them. And I'm excited to be on the tip of that spear with this particular product.
Right.
So I had a follow-up. So for those that don't have $100,000, for that awesome product you mentioned, $500,000 benefit from $100,000 investment, that's pretty good return. So is it the life insurance long-term care rider then for those who have more modest budgets with a more monthly premium type arrangements where you're going to steer them?
Not necessarily. It would depend on their needs. Care Matters can facilitate those people still. We have payment schedules that go out as far as 10 years.
Okay, I gotcha. Okay.
Yes. So we can accommodate those folks also. When I made that statement about the upper net worth people, those are the people that have the readily available cash to leverage this program. Those are the people that might have $200,000 sitting in a money market account because they just had an investment that closed out or something like that, or they sold a piece of real estate and have that money sitting there. That's what I was referring to. But yeah, we're going to accommodate everybody because the bottom line is 78 million baby boomers, they're not all wealthy. So there's going to be a trickle-down effect, and there'll be a trickle-down effect in our long-term care services also. We have to accommodate everybody that has a need, not just the wealthy.
Right. And Care Matters outside of California does have monthly payments, but in California, that's not quite yet approved. Because long-term care is really about two things: protection of care, quality of care and protection of assets.
Right.
That's it. Can you get to the quality of care that you want? And do you have assets that you want to protect?
Right, that's it.
That's an important point because we've all experienced finding for our grandmas and older aunts a nursing home facility that's not a piece of crap.
Right. Exactly right.
So you're going to want to spend more to get your older relative into a decent place.
Right. And you know, our experience, Charles, is that, and Jeff, is that most people can take care of this issue if they give it the time that it dictates. They plan. You know, that's the problem with most people. They fail to plan, right? They have all these ideas, but they don't put any plans into action and then execute those plans to fruition. And in this particular area, you have to do that. You have to pay your due diligence for, you know, what's the options.
Right. Absolutely. And right
So-
now, for example, in California, what is it, assisted living, she's paying $16,000 a month
A
for
month.
her care.
A month?
Yeah,
Wow.
some of them are crazy.
A month.
How many people have you dealt with where one of their initial concerns was, boy, I sure hope I don't outlive my money.
Yeah,
Yeah.
there you go. Now that's a really pathetic feeling to have, okay, that you might outlive your money. Back in the day, you were just worried about having a good quality of life and living as long as you can. But now, if you don't have the money, is it worth living?
Right.
What quality of life do you have?
And even at that, you don't know if I'm going to live the 10 years or 15 years or whatever. So should I start eating cheese sandwiches today to make it last? Or am I going to eat nicely and then suddenly I run out of money after 5 out of 15 years or
And
whatever?
you know what, Charles, I don't want to go off on a diatribe on a different tangent, but the bottom line is, financially speaking, there's so many people that are left behind when it comes to financial issues. I mean, our educational system, 3 major things we don't learn about. We don't learn how to raise children. We don't learn anything about how to have good marriages, and we learn nothing about money, right? Those are probably 3 of the major things that happen in our lives, and we get no kind of guidance whatsoever. Unless you read your Bible or the Quran or something like that, you don't get any guidance on that type of stuff in the school system, the educational system. Everything is designed to take from us. Everything is designed to take from us. So if you're not educated in the areas of finance and the areas that we're talking about right now, you're going to be in trouble. You're going to be in trouble. And I feel very fortunate to be in a position and have the feelings that I have for people to want to help and to want to educate them and give them what they need, because it's vital. And we need more people to be able to do that out there.
Right. And a lot of cultures believe in caring for their family members as they age. And I've just seen it destroys families. It truly, truly does. Because now they're resentful of their parents or their grandparents because they can't go to the movies or take a vacation because they have to care for them. And you know what? It's not saying that you're not going to want to contribute and care for your loved one, but you don't want to be taxing and be the primary care or the only care for your loved one. Have that support, professional support, and preserve that relationship.
Well, that, and like you said, they're not prepared for that. They're not trained to do any of that. You know, they're just pressed into service. So if they're pressed into service periodically, like they're taking care of your friend's dog for the weekend, it's one thing. But if I got to like take control of the dog all of a sudden, oh, no. This is a whole new world to me. Let's grab some other last question or two here. We got a little bit of time left here. Let's see if
Jeff,
you got one for us?
I wanted to welcome David with the diatribe. We love diatribes on our show.
Don't get him started.
We thrive on them. You got to provoke, and this is an issue you got to provoke folks on.
Thank you very much.
And that's such a true statement. What was the 3 things? Raising kids, marriages, and finance. That's so true.
Although it's supporting half the economy, if we learned those 3 things, you know, half the country the other half would collapse. They wouldn't have any business, which is actually a good thing. I'm being a little silly in that regard. You know, what do you do with the client who after you, because I, sold long-term care in my day. Back in when it was the kind that, like you said, you used it, you lost it, it was expensive. And somebody that I broached was a little on the older side at that point when they went to consider it. So I ran the quote and I showed the guy the thing. He's looking at it like quizzically for a minute. He points at this one number. He goes, "Is that your phone number?" So I said, "No, that's what it costs." It was great. So that, or like the individual who, this was my favorite one, because when they saw what it was, and the guy looked at his wife and goes, "Look, honey, trash days on Tuesdays. Just put me out on the tree lawn and call it a day." So, but that's them trying to just either, I don't know what, just laugh off or whatever their failure to plan. Because in some instances, it's too late, sadly, for certain people.
Yeah, that's true. That's exactly right. I mean, time doesn't wait. And if you let that window close on you, that you're supposed to be doing the things that necessary to prepare yourself for when that window does close, then you're in trouble when the window closes. But I think that for most part, this is a big deal, and this is a big subject matter, and people just need to have the information, I believe. You know, people are scared because they don't know which direction to go. They don't have enough information to make good decisions with.
Right.
Well, and it's also a topic not too many people find to want to talk about.
That's
You
true.
know, if
Also.
you're trying to broach it with your little kids or whatever, they're like, you know, Daddy, I don't want to talk about this anymore, kind of a thing. It's too scary. And, you know, and even as an adult, people don't want to think to that. But, you know, like you said, if I had that 100 grand to drop, you know, from a low performing thing, that's really great. But for that person that's got to make payments, well, that's really good too. However, they need to have started young enough for those payments to make sense. And other people, well, why is this long-term care so expensive? Well, excuse me, how old are you right now? Oh, well, how much closer to needing it do you think you are than someone that bought it that's 20 years old? You know, where the company could charge little and have many years to collect from you, but now you're going to need it like in 2 weeks from today. You know, so no wonder it costs a fortune.
Right.
So yeah, it's a conversation. You're totally right. You know, and you know, just from my own experiences, most people that talk to people about planning and helping them very often don't talk about the long-term care part of it, though.
No, they don't.
No.
They talk about money and 401k and like all the other stuff, but somehow everybody just doesn't even want to talk about this topic.
It's so funny you just said that, because
Yeah.
while you were making that statement, in my head I was going the other way, because anybody that sits down with a financial planner, financial plans mean from cradle to grave. You have to consider everything about the person, every aspect, because what good if I'm going to sit down and talk to you about life insurance? Why shouldn't I be talking to you about long-term care? If I'm protecting your life, I'm protecting your income. Long-term care is part of that package. I need to talk to you, at least have a conversation with you about that. If I'm the expert in that area, then it's my job to raise those questions to you. It's my job to poke you where you need to be poked. Now, whether you respond to the poke or not, that's totally up to you. But it's my job as a professional to poke you and make you aware of those things. Too many professionals are too busy thinking about their pockets instead of their families that they should be supporting and leading and helping. That's a major problem that needs to be reversed also.
That is a part of that problem. But the other thing too is in that, you know, if you're doing what you're trying to do, you're trying to build a rounded program. You know, other people think too simplistically. You know, well, you got your health insurance and you get your life insurance, boom, you're all done. You know, and they've left a lot of little in between. And that's what you're trying to do, is say, well, look, if we only have this much budget, instead of just only getting life, then maybe we'll get a thing that's blended. So we've got a little of this and we got a little of that. So you're doing the right thing by that person. You know, you're going to benefit one way or the other because they're going to buy something from you. So, but why not sell them what's going to be optimal for them? You know, long after they don't know you're not even around anymore, and they're still benefiting from what you did for them.
And you know what? Honestly, we've had so many times where we talk to a family and they have a guy dealing with their finances, their 401ks, and their retirement. And I'll ask them, what do they tell you about long-term care? And the answer always is, I'm just going to self-insure. It's too expensive. Right. It's because they don't know the options that are available, or they're not licensed. Their professional may not be licensed for long-term care.
Well, the other thing is the other side of that is the selfish side. Okay, the bottom line is when you have money sitting in those types of vehicles that typical financial advisors deal with, they don't want the money to leave those places. Exactly. They need those assets to stay under management. If you move those assets and put them into a long-term care program, that advisor is never going to see that money again.
Right.
Right.
So now they concerned about you and having your long-term care needs met, or they concerned with feeding their family and being able to do the things they want to do. That's a toss-up. I don't have that dilemma. You know, you do the right thing by people and you get taken care of, period.
Well, that's the challenge too, because if I've had that quote unquote guy, like you said, and a lot of people do, you know, then you have a lot of faith in what they say. And of course, they're going to be very nice. They're not going to like say what you've got is terrible. However, they don't need it. Because just like you said, they lose that money under management and there go their commissions or whatever they're doing. And so, yeah, unless they're getting paid in a different way, they don't, you know, or they'll want to try to sell what you do type of stuff, or whatever it might be.
It should be the mission before the commission. Okay,
Yeah, there you go.
To serve families.
Well, usually it takes care of itself, as we've discovered, as Charles and I have, if I can help you become that cash pay patient, we all benefit together. You benefit, but
Right.
I'm going to benefit, and then others benefit, which is even better because you get that leveraging effect. Like you were showing, like I said, we all should be so lucky to be able to put 100 grand in something right away because boom, look at how much I'm in the black immediately, as opposed to making payments for 4 years to try to get there. So
that's why I love this community. That's exactly why I love this community.
yeah.
Givers
Yeah.
first.
Well, I appreciate you guys being there today. We're zipping out of time here, but we're going to definitely, like I said, we're going to continue that conversation. So we're going to carry you guys over into our little area over here. So we'll get that up and running, and we'll move some of the stuff over and get some back and forth going there. So it'll be great. And you'll also be able to contribute some content and the like. And again, remember, we are letting you find out about all these events. This one will be recorded, is recorded, I should say, and will be released over the weekend. And it'll be on any of these channels, as I said, including our new one. And then also we have one of the last sponsor. We are showing in the little marketplace. And again, you want to come in here, explore. There's all sorts of really neat organizations and things going on here. Here's all about the healthcare program. We were just talking about that app a minute ago. But here's this nutrition and immunity. Well, this is an organization we found they have some unbelievable breakthrough products. This is really probably the only bioactive, proactive, efficacy level type products out there. This one, you can't say what it cures, but it definitely does some very interesting things, let's say. And this one over here is actually a substitute for food. So if you're like out hiking or you don't even have food, you live in some horrible country, they don't even have food typically, you can just have this all day and you don't even need food. So they got some really fantastic stuff that's coming out, and they advise other companies on how to make their products highly more effective. And they too are giving a special pricing for our members. So if you can go over there, they're going to give you a chance to get the stuff and you're able to save. And I think they're doing 15% off. Yeah, 15% off too here too. So you'll see you can even have some consultations with their top scientists and stuff. So make for some very interesting activity. So you guys, thanks again for today. I appreciate you being here. Okay, so what I'm going to do though, actually,